Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Amid the shortened US trading week for the July 4th Independence Day in the US, the market is still somewhat bullish for the Australian dollar, having taken a brief pullback, is now finding support close to the region of 65.30. Overall, though, we do need to see a clear break to that top side level of 66.15 to produce a further rally onto 66.65 before reassessing. Overall, though, the technicals have buckled slightly, so we may see another pullback into today's session as all eyes turn to this week's US June non-farm payrolls report, with a forecast of 111,000 jobs added, down from 139,000 in May, with the unemployment expected to rise by 4.3% from 4.2%. Investors are closely watching further data on the economic impact of tariffs before the Federal Reserve decides on a rate cut. A disappointing report could prompt the Fed to cut rates sooner than expected, possibly as early as July. Meanwhile, looking to next week, market consensus increasingly anticipates a 25 base point rate cut from the Reserve Bank of Australia from 3.85% to 3.60%, with potential cuts also in August, bringing the rate down to a target around 3.35%. The US dollar, meanwhile, is flat and sits close to the 3.5-year lows around 96.40. Moving on to the euro, the market rebounded in the European session and ended flat at 118 as all eyes look to the US non-farm payrolls report. Overall, though, keep an eye on what's happening with the US President Trump and also Jerome Powell, as further pressure on Fed Powell, calling him for his immediate resignation via social media and citing calls for a congressional investigation into Powell's testimony about the costly renovations to the Fed's headquarters. Powell denied the allegations, calling them misleading and inaccurate. Interesting report there. Overall, though, I still feel there is a little bit more upside, but keep an eye on that dollar index because it is showing a bit of bullish divergence and therefore could see the market reject the 118 area and see a pullback to around 117.40 and a base holding around 116.70. Moving on to dollar yen, the market attempted to recover but ended presently flat. Overall, though, all eyes is still on that bottom side target around 142, and keep an eye there because there is possibly a lot of stops down to 140. Any renewed upside attempts is expected to fail. Sterling was weaker overnight after a political uncertainty fled over the finance minister's budget following a significant revision to the welfare reform bill. In light of where the market sits, let's see if it can recover, as we may see a little bit more to the downside to 136.35 before the bounce. Overall, though, I feel the market has potential to recover back to 137 to 138. Turning to gold, the market was a little bit mixed into the close of New York this morning. Bargain unders may drive the market further beyond its recent 3,338 to 3,373.78. Any weakness likely to be temporary. Wrapping up with oil, the market surged after a potential breakout came through and now looks towards $68 a barrel as a target. Overall, though, any weakness likely to be shallow and further gains are expected. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the day.